Welcome to our webinar. This is going to be the first webinar for this year, the first one, but we're going to be running regularly from now. Today's topic is how to protect your assets and keep more of your hard-earned money. I don't know about you. Have you ever experienced situations where unexpected financial challenge, for example, a tax audit or somebody trying to sue you, a legal dispute, and then you sort of at the risk of potentially wipe out everything that you work hard for, your assets, the money in the bank account and all that. We have clients that experience that scenario and is really a frightening and nightmare. It can happen to anyone. A lot of people would think that it might not happen to me. Life is unexpected. Like things can happen. I just want to share with you that why it's important to be proactively and to protect your assets and minimize your tax. I'm going to discuss with you different strategies and structures that can help you to achieve your financial goals while also protecting your assets at the same time. Before I start, I really want to get some input from you. I'm going to ask you questions and Mara's going to put the questions on the screen. It's how concerned are you that protecting your assets and keeping your hard-earned money? I want you to take a moment to answer these questions. It's very important because that will sort of guide us towards the rest of our webinar. Wow, so far I have like 100% very concerned, which is true. What I'm going to do, just want to let you know that you are in the right place. That's exactly what we're going to discuss today. It's how to protect your assets and keep your hard-earned money. I completely understand your concern, and that's exactly why I'm here today, to help you to take actions to achieve your financial goals. For people that don't know me, my name is Eng Si Viang, and I'm a FCPA, Fellows of Salman Super Fund Specialist, and a registered tax agent. I have been in this industry for more than 30 years now, and I've been helping clients with tax planning and assets protections. As a founder of TMS CPA Accountants, my team and I have the expertise to provide you with the best possible solutions for your financial needs. Our motto is working with you to achieve your goals. Our aim is to help you to achieve your goal. Protecting assets and structures and all that is our expertise. The next questions, I want to understand your goals. On the screen, you probably can see Mara's put it there. I just want to know what is your top financial goals at the moment. We have more people that wants to reduce their tax and paying off their debts. I understand this interest rate is going up and all that. Having a lot of loans is very stressful. The main thing, if you know the way to reduce your tax legally, then you can keep more money in your bank account. Those money can pay off your debts more faster. So that's why having a right tax planning strategies and having the right structures of investing in your assets, it's very important, because whatever the money that you can save, that can go towards paying off your debt more quicker. And that's why it's very important to know all those strategies and structure. Tax planning is very important it's very crucial components of your financial success. The best ways to demonstrate how tax planning work and also the tax structure work is by case study. And that's why today, what I'm going to do is that I'm going to demonstrate to you a real case of our client's case. But of course, I changed the name to John and Jan for personal protect privacy. What is this case study about? Some of you that listening might think, oh, that it's similar to my circumstances and things like that. I just need to put a disclaimer here. This is just demonstration. This is genuine information only. It's not a specific advice. Before you act, before you do anything, like you say, oh, that sounds like me, and you're going to do it, then you might get it wrong, because everyone's circumstances is different. And that's why we encourage you to seek advice from us, okay? Because to get it right is very important. If you get it wrong, it's going to cost you money and you're going to wasting a lot of time. The case that I want to share with you, it's John and Jan. And this is a real case that they came to us. They came from New Zealand and they start a seafood takeaway shop. It's a small shop. Previous accountant say, just set it up as a partnership because you're husband and wife, and that's the easy way to set it up. But the problem that they have is they got an ABN, but then the previous accountant did not register the GST. When they came to us, it was their second year of trading and their turnover was about 75,000. If you're running a business, you need to have an ABN. And then if your turnover, you're estimated to be over 75,000, you need to register for GST. And then you need to lodge the business activity statements either every quarter or lodge it annually. When we review the financial situations, they didn't register for GST. That means that they never lodged the business activity statement. They're also frustrated. They say, why do they have to pay so much tax? Because they're operating as a partnership. So whatever the profit they earn is split into half. Because it goes to their personal tax return, they have to pay a very high tax marginal rate. Not only that, they also hit with the what we call is the PAYG installment as well. They also up for not this year's tax, and they have to prepay some tax for the next year as well. Because with the self-employed people, what the tax office do is once they know that you have a business and you have to pay tax for this year, then they will estimate that next year you're going to be earning similar. So they get you to prepay your tax as well. They hit with this year's tax and they also get PAYG installment tax. It's a really big burden for them and they feel really frustrated. They told us their goal is help them to reduce their tax. They bought their own home and they say, we're running a business, but we don't want to be at the end. We got nothing at the end. If somebody trying to sue us and something goes wrong, the insurance doesn't cover them. They want to protect their personal assets. And they also want to be building up their wealth to look after their kids. And most important thing, they wants to pay off their home loan quicker. The problem is the previous accountant did not register the GST. And another bad thing happening was that we found that there's a mistake in the partnership tax return. They forgot to claim quite a lot of tax deduction. We asked them to amend their partnership tax return. They have a good profit in the first year, which is very lucky, but then unfortunately, they have to pay a lot of tax because there's no tax planning. They pay high tax margin. The record keeping was messy. They don't have any record keeping. They just write it in a daily book. They don't use any software. The record keeping is very bad. So what happened was that we have a discovery meeting with them and we use our interview checklist to go through, have you got this? Have you done that? Have you do this? And checking all whether the tax return are complies. And that's what we found out. There's so many things goes wrong. What we do is that the first thing first, before we're changing their structure, we need to get the tax compliance up to date. We need to fix up the problem. So what we did was that we registered a GST for them and then they have to lodged all the BAS that are outstanding and they have to pay GST, which is a lot of bill for them. We wrote a letter to the tax office to ask to waive their penalties and because it's the first time and very lucky the tax office waived that. It's a good news. We'll come up with very good record keeping for them. We're using Xero and we have our way of how they should keep their books and to give us the right information. Keeping record is very important in this country because it's the only evidence that you can prove to the tax office that whether you make money or not making. A lot of people say, if I don't keep a proper record, then the tax office can never find out exactly how much money I make. That's wrong because that's even worse. If the tax office come and check on you and then you can't prove to them that I really have a bad year, I didn't make a profit, but you can't prove that, then they can do self-assessment to assess, this is what we think that your income is going to be. Like they will look at your assets that you own and, you know, you got a new car, you got the house that you live was massive and you send your kids to private school. Where is all this money come from? The tax office is very smart. They can work backward. But if you keep a proper record, like you record everything correctly and all that, they're not going to doubt that. You just have to present it to them. This is my income. This is all my expense. This is all my tax invoices. Everything you can prove. You reduce your tax more and it's actually better. And you have that peace of mind and you're not going to worry about when you come to us, we will encourage you to do it properly and to do it properly, not only help you with tax compliance, but it help you with your business as well, because you know exactly how your business is performed. Keeping accurate records and maintain a record keeping system is so important. And that's what we are good at as well. And we advising John and Jen what to do and making sure that they follow it and they pay the correct tax on time, lodging the business activity statements that on time as well. We also went back and amend the partnership tax return and they actually reduced the tax, not much, but at least it's better than nothing. But the main thing is that we got the partnership tax return right. And because when they came to us, nearly towards the financial year end. So we say to them, oh, let's finish the partnership. Let's finish up this financial year. Start from the next financial year. We can look into a new structure for you that can save you more tax and protect your assets. That's what we agree on. We complete the partnership tax return for the second year, but that was the final one. And then we also explain to them all the tax compliance in Australia, what they're supposed to do and all that. We work very closely with them to make sure that they understand their obligation. We meet with them, they call us to discuss things. The main thing is that we just want to protect them from penalties and all these troubles. This is just an example of if you are a business owner and you're running a business in Australia, this is like a basic key duties and obligations that you need to comply with the tax law in Australia. For example, if you have a business, you need to get an ABN. If your turnover is going to be about 75,000, you need to register for GST, and then you need to lodge the business activity statements. You're collecting the GST on behalf of the government. It's not your money. You can also deduct it out the input tax credit, the net GST that you have to pay. You have to fill the form properly. We can help you prepare the business activity statements and submit it to the tax office on time. Keep accurate records. That's what we did for them. Lodge the tax return on time and pay tax on time and help you to understand the basic tax. You're not a tax agent, and that's what you're looking for, a registered tax agent, an accountant to help you. We don't expect you to go and understand the whole tax law, but at least some basic. What happened was that after we get everything up to date for them, all the tax compliance up to date, then we look at the new structure for them. And after we understand John and Jen's family situations, they have kids and what they want to do, they're not going to have any partner in the future that's going to keep it all within the family, then we come up with a really good structure. It's called Business Trading Trust. This trading trust is mainly used to operating the business. It's separated from their personal assets. So it's a really good structure that can also help them to reduce the tax legally and protect their assets. And I will explain a little bit more what I mean by this business trading trust. It's separate business from personal assets. That is really important. At the moment, if they're operating as a partnership, and if it's something happening to them, like somebody suing them, maybe not just business, maybe personally or whatever, because they own a home in their name, they're at risk. The people can get that. The quickest ways to get rich is not by working hard, right? A lot of people think it's to get from someone. That's why it's so popular in America. And now Australia is the second litigious country. They're suing each other because that's the quickest ways to get assets or money from the other person. The lawyer now is very smart too. If you don't know how to protect your assets and you put all your assets in your name, they're very easy because with the internet, they can easily search what you own, what assets you have. And if they find out that, wow, you are so rich, you have properties, 2-3 properties and home and everything under your name or your joint name or whatever, this is a really good case. Then they will tell their client that, don't worry about paying us. What we do, we're going to sue them for 2-3 million, whatever. If we win, we get 30%. We just take 30%. You don't need to worry about paying us the fee. Well, for people that are trying to sue you for money, they don't have money. That's why they want to sue you. For them, they've got nothing to lose. They say, okay, you just give me the paperwork. I'll just sign wherever that you want me to sign. The lawyer will doing the job and they will send you the letter and do whatever to get you. You're going to be so stressed. And at that point, if you're thinking that you want to protect your assets, sorry, that is too late because there's nothing can protect you. If the legal dispute already started, there's no way you can protect your assets because whatever that you do at that point, the court can call back those assets to give it to the creditors. But what I mean is if you know how to protect your assets, then at least you're going to have the choice. Let's say if your business is under a trust, if your property is in a trust, nothing is in your name and under your name is full of debts, like full of liabilities. And when the lawyer check on it, oh my God, this person doesn't have anything. The lawyer is not going to do the work for free. They're going to tell the client, the people that want them to sue the other person, say, you have to give me 50,000 and put the money into my trust account first. And then we can deduct the fee from there. They're not going to take the risk because they know they might not get anything. So the people that want to sue you, because they don't have money anyway, how are they going to find the 50,000? So you might be able to get away from that. Let's say it's your fault and you did something wrong. Then I would suggest you to go and negotiate with that person. How about I just pay you this and we settle the case? You know what I mean? But if it's nothing wrong, then you can walk away. So you have a choice. That's why it's very important that when you set up a business, you have to be separated from your personal asset. You have to be business is on one side, personal assets in the other side. That's what we suggest. We recommended John and Jan to set it up, the business trading trust. The other advantage is the profit distribution, because if the trust makes the profit, the net profit, not like in partnership, the 50-50, everything distributed to two of them. But if let's say they have kids and all that, if you have a trust, then they can distribute some to them, some to the kids. We recommend them to set up a bucket company, which is called a wealth accumulation company, to accumulate their wealth. If they're operating as a partnership, let's say they earn, the net profit is 600,000. If they split 50-50, that means 300,000 goes to their personal tax return, their taxable income. And working out the tax, that each of them, they have to pay 116,167. Two of them will be 232,334, which is a lot of money, right? Nearly sort of like a nearly 39% to 40% of tax that needs to pay to the tax office. The problem is that once this tax pay to the government, you can never get it back. It's gone, it's gone. But if you set it up as a business trading trust, then what you can do is that you can do some tax planning and you can see what is the best ways to distribute this profit to who that can give the best tax outcome. For example, in this case, I'm just going to give John 80,000, Jan 80,000. The rest, because the two kids are still very young, under the age of 18. So it's not much you can give it to them, like 416, which is nothing. I'm not going to put that into here. It's just not making much difference. The rest, I will put it into the bucket company or a wealth accumulation company, and that will limit the tax to 30% only. The good thing about this tax is it becomes like an imputation credit. It's a franking credit. So later on, when they start to slow down, when their income start to come down, then their company can start to pay them dividends. And when they pay them the dividend, they're going to get some franking credit back. The tax that they pay in this company, it's accumulated in the company's account. It's like a franking credit. So it's going to be part of their retirement money as well. We have a client about 20 years ago, they came to us and it's a very similar case. We changing them to a company. They're paying tax every year. 3 years ago, they retired. Now, what they do is that they live on these dividends. Plus, every year they get a franking refund. They get a real money tax refund from the tax office. They have their dividend plus their pension, which is enough for their living expense. It's very important that you plan it now. You work really hard. You want to be able to keep more of your money, keep more of your wealth and build up your wealth for your family. If you don't plan and everything goes half to the government, then how are you going to look after your family and how are you going to have a good, comfortable retirement, right? Just imagine every year they're saving 64,000. Just example, in this case, assuming that every year they got a good profit. 64,000 is a lot of money. And for 10 years, that's about 640,000. This money can go towards paying off their home loan more quicker. Or if they pay off their home loan already, maybe some of the money can take the whole family for holiday. There's so many things that they can use it on lifestyle. That's what you're working hard for, right? This is all legitimate. This is all legal, but you need to know how to do it. What is business trading trust? Now, I'm just going to explain to you slowly what does this mean and how does this work. How we set up the business trading trust is we always recommended a corporate trustee. A corporate trustee is somebody looking after the trust. And you can have individual trustee or you can have corporate trustee. But the advantage of corporate trustee is, let's say you die, you can easily pass it on to your kids by just changing the directors and transferring the shareholder. Assets protection as well. Before we set up the business trading trust, we have to set up the corporate trustee, and then we have to have a settler. Settler is the person that set up the trust. They will give an initial sum, maybe like $10 or $100 to set up this business trading trust, just the initial sum. In the business trading trust, the most important person is this appointor. Appointor is the person that controls the whole thing. If this trustee is not good, is not acting good for the trust, they can sack the trustee. They are the ultimate controller. When we set up the trust for people, we say, who is going to be the appointor? It's very important because this person is like a god. It can sack the trustee, get another new trustee. The appointer is the most important. But when you set up the corporate trustee, you also have a directors. Directors, it's the person that managing the whole business, and you also have shareholder as well. But this corporate trustee is not operating; it's just acting as trustee for the trust. Even though very powerful, right? They can do whatever, but they also have to follow the trust deed. Trust deed is the rule, the terms and conditions, the rule, what they can do, what they can't do. They got the power, but they still have to follow the trust deed. What the trust deed say is what they have to follow. And if they want to change the rule and change the terms and conditions, they have to upgrade. They have to change the trust deed. Otherwise, if they do something different from what the trust deed can do, then they can be in trouble as well. So they can't. The trust deed is a very important document when we set up the trust. The corporate trustee is the one that conduct the day-to-day operations, and it's the legal owner of the asset. That means, for example, if you go and buy business, then in the contract, corporate trustee is the legal owner of the asset. If you go and buy the business, you will see in the contract, it will put the corporate trustee's name. Or if you go and buy property, the legal owner of the property is the corporate trustee. The corporate trustee is the legal owner. So you understand that, like, when you go and buy the property or buy the business using the trust, you will see in the contract, it will just put the corporate trustee's name. And that's how it works, because they're the legal owner. All the income comes into the trust, and all the expenses paid from the trust. And all the assets and liabilities is all held in this business trading trust. Then when they're operating the business will make profit, and then the income will get distributed to the beneficiaries. John is the beneficiary, Jan is the beneficiary, also their children. And the beneficiary have the right to benefit from the income that generate from assets held by the trust. So let's say if this trust is holding the business and the business making profit, the corporate trustee have to distribute all the profit to the beneficiaries every year. If they hold up the money in the trust, they're going to tax at very high tax rate, which is 47%. But if they distribute all down to the beneficiary, then the trust doesn't pay any tax. As you can see, that their family is not a big family. If they just distribute everything to John and Jan, it's sort of pretty similar to a partnership, right? It doesn't really help with the tax. So that's why we add this corporate beneficiary in there, which is the bucket company. We just distribute enough to John and Jan and the children, but the rest we want to put it into this wealth accumulation company. This wealth accumulation company can do a lot of things. It becomes like their bank, and it becomes like their finance companies. In all the money goes in here, it's also protect their assets as well. And it's also only pay tax on 30%. If they need money to buy a property, because of course you're running a business for the purpose of you want to make profit. And when you have the money, you want to enjoy it. What's the point of if you keep all the money here and then you're not growing it? Company, it can be like their finance company. They can borrow the money from this company to buy property or to buy another business or to get some assets to build up their assets and all that. It's a really good structures to have this wealth accumulation here. We don't use this company to trade with other people. The risk of getting sued is like if you open up to the public, if you're trading with other people, then there's a chance. But this company, it's just like your safe, it lock away. Nobody really know. It's your wealth that you accumulate all in here. It's a really good just to have. And what is the impact? What does this all mean to John and Jan? After implementing our recommendation, they were able to sort of streamline their business and ensure the tax is compliant. They can result in massive tax saving, which is 64,000 is not a small amount. It's a really worth it exercise to change the structure. Also, we have a very good record keeping system for them. It's also making them that peace of mind and stress-free, and they can really concentrate on running their business. And it increased the automation, the efficiency and growth of the business. It's all the positive side. Because our aim is we really want to help our client. You're good in what you're doing. You go and work hard in your business and grow your business. We're good in all this tax compliance and book record keepings and making sure that you comply with the tax law and making sure that you set up the right structure to hold your assets and protect your assets and reducing your tax and all these tax rules. We could do all those paperwork and all the stuff for you, and then you can have more time grow your business. So it's like a teamwork in a way. The setting up the business trading trust really allowed them to protect their business assets and potentially minimize their tax liabilities. What I want to say is that choosing the right entity for your business operation is very important. It reduces your personal liabilities and also protect your personal assets as well. And it reduces the risk of the legal and financial issue in the future. Choosing your business structure is very important. It's very different. Like when people first start the business, they always say, oh, I just started as a sole trader, or I just started as a partnership. It's fine. If you don't have any assets in your own name yet, and you just start up and you want to be a low cost and you want to try it out whether the business is working or not, you're not sure, then that's okay. But later on, if your business is really doing well and it's really growing, then you better change it, because sole trader and partnership, it's really mix up your personal assets and your business assets all together. And if something happened, like just one little mistake, you're going to be all wiped out. All your asset, hard-earned money is all gone. So it's not worth it. It's not worth to stay simple. People say, I just want a simple one, sole trader or partnership, but it's actually make it worse for you. And if you set up the right entity, for example, you can set up a business trading company, you got business trading trust, it can separate your personal and business assets. And then also it will reduce your personal liabilities in case of the legal issues. It also gives you a lot of tax benefits as well. And it gives you the rooms to do the tax planning. And what we really encourage you is to talk to us. What we do is that we look at each person's circumstances and where you are now, what problem that you have or what issue that you have, and where do you want to go? What is your goals? What do you want to achieve? And then we're looking the whole thing. We can come up with a good recommendations, what actually suits you. It's not one size fits all. Oh, because John and Jan have that, I'm going to have the same. No, because we understand the situation, but your situation might be different. So it's very important that you seek expert help to get it right. If you set up the right structure, it's just like you set up a right foundation. It will make your business grow high and your assets grow really high. But if you set the wrong, it's just like a house, right? I want to save money on building up that foundation, like getting a concrete, like not very solid. And then when you build up the house and when the thunderstorm come and rain and all that, the house just collapse or crack and all that. Same thing. If you set up a right structure for your assets, for your business, for your property, you're going to grow really, really high. And you're not going to worry about that. Even the rain come, even thunderstorm, even somebody trying to sue you and give you a hard time and things like that, you're going to have that peace of mind. It's so important. Just to sum it up, like protecting your assets and keeping your hard-earned money, really giving you that financial security and peace of mind, ability for you to achieve your personal goals is so important. This is a real client review, and you're probably over 10 years ago. I was an employee and helped him to transition to a business owner and doing all the things that we have to do. He's very, very happy. Give us the 5-star Google. Our firms, it's aiming for, when we service you, we really want, like, if we really truly a 5-star Google rating. That's very important. Are you ready to protect your assets and save on tax? If you are, I really encourage you to book the free 15 minutes consultation with us. And you can call us 0297256169, or you can just go and visit our website, the tmsfinancial.com.au. And in there, you can click on contact us. There's a form and you just fill up the form that are your business owner or individual and answer a few questions, submit that form. Then one of our staff will contact you and to arrange you to talk to our CPA tax experts to help you to sort all this thing out, to protect your family assets and reduce your tax by setting up the right business structure for your circumstances. Thank you so much for joining us today. Thank you.